Hi everyone. Today is January the 31st. It is a Friday, and this is the Moneyball Morning Report for the Benzinga Pro platform. What we are looking at is the end of the month trading, which potentially has a fair bit of volatility attached to it. We have a gamma line sitting at 61.50 for the 0 DTE options, but that doesn't quite match what resistance looks like. That's 61.30 and some change. But we can see 61.50 being right here at the top of the two candlesticks for January 23rd and January 24th. So we do see price action heading to the north under less momentum. Trend is still telling us buy the dips, so we know that's there. Let's collapse into the 1 hour time frame. Please note that on the daily, I'm using this candlestick on January 27th still that shows us the big motion that we need to come up above. Notice how many of the prices we've retraced over the coming days. So if we anticipate a retrace, we could essentially come back into that 60-68, and that level gives us a beautiful buy zone. So I want you to think about that from a buy perspective, that 60-68, if the price action gets incredibly dramatic. So what are we looking at intraday? We can see that the first hour of trading, we are well over that line, and you can see that the traders came back in and tried to see if they could test that line at 61.09. And so that is actually the floor of the day that I am looking at for bullish motion. So that's the go, no-go line. Seems pretty far away from where we are right now. And it is. It could be that we only pull back to 61.11 to 61.15. So you could see some buying opportunities there as well. If we get below 61.09, then it seems fair that we would have another 10-point drop, okay, to 60.99. So I would say that would be the long action event if it came to us intraday. And if we lose that level, we're going to look for failure to hold higher on the candlesticks, and then we'll watch it collapse back into the motion. Notice, see the Keltner is flat above and trending below. So we know dips are where the buys are this morning, and we've tried to put in a little bit of a topping action event here, but my suspicion is we come into 61.11, it holds, and we head back up to 61.30, and then another 20 points to the north at 61.50. And if we fail, our bottom edge is 60.91. If you're so inclined, you could take a counter trend trade short at 61.17, but that is very counter trend. All the moving averages are against you. Momentum is against you. It just seems like a bad trade to me. All right, let's go to the NQ. Looking at the daily chart, fairly sideways. Apple did really well. Listen, if you still hold that Apple butterfly that I put out for us, that staggered butterfly, that's going to be printing money today, even though it doesn't expire until the 21st. There's a lot of potential action there that looks really, really good, and you could probably get, another 100% if it holds on this upward track today. All right, so now that we look at the NQ, we can see this is our candlestick, still January 27th, and the candlesticks inside of this 27 motion have largely retraced each other, okay? We have a little bit of dipping momentum, sideways moving averages. So dipping momentum, sideways moving averages tells us big bounces, going to be sell zones, big dips, going to be buy zones, okay? So where are the big dips? My thought, 21,592 to 21,452. Those are starting to look like very sweet spots for potential long action. Let's go to the 1 hour chart to see what the go, no-go line is. take a look. Sideways momentum, upward trending moving averages. That means dips or buys. But again, we're looking at a Keltner channel that is sloping up from underneath, but flat from above. And that means that at this time, traders are having a very tough time carving out new highs and staying there. What could happen here at the breach of 21,807? We could have ourselves a bit of a breakaway. Because we have momentum in our favor, we have trend in our favor, our dips are still going to be the ideal buys. Intraday, we need to fade and then recover 21,748. Look at the opening candlestick formation. That actually gives us a lower level of 21,725, and then value area high at 21,700, and then one more at 21,670. I felt all of these levels yesterday were key levels to initiate a trade. And so my thought is, with this kind of momentum, the shallow dip probably is going to give us the best bet. But if we get to 748, if we get to that 21,748, and it begins to look shaky, meaning we close a couple of 5-minute candlesticks below it, it's probably going to drop another 20 points. If you're okay with that risk, make that the hard stop. My thought is always, why don't you try to get your entry close to your hard stop? And that ought to give you some motion. Okay? So err on the side of caution, saying, I think I'd like to try it at the top of the opening range, and I'll take the long from there. If it doesn't work, I'll step out with a little bit of a haircut. And then, if it's underneath that 725, it easily could come back to 21,670 or so. Okay? So that's what we're watching. Pullbacks are buy zones. First opportunity, 21,748, if you really want to pull the trigger. And then this breakout here, under this momentum, could have sellers rushing for the fire escape, and that's going to put us in an upward trajectory. My thought is rotation. Actually, that's what I'm seeing from the volume profile right now. Rotation looks very likely from this edge. So if it breaches, that's another story, but rotation off of this zone looks pretty likely. Rotation into support. Sorry, I don't know why it took me so many words to say that. I have a granddaughter that tells me I use too many words, and I think she's right. All right, topping formation. Taking a look at the YM. Sharp move down, sharp move up. But look at the movements of days late. Total retracement of candlesticks. So if we hold this edge, which is the high of January 27th, or we recapture it, it tells us we're likely to head to the top of the box. If we hold this 45,138 and it begins to break away, we've got more highs on the horizon here. 45,551, 45,858. I don't know that that'll be an intraday motion, but we can clearly see a ton of momentum and a ton of trend. It looks like we had some news just come out. So we'll see what that is a little bit later. But here we are. Trend is up. We have the Keltner band squeezing in a little bit, so it's tightening before a move. Momentum is up, so the dips are buys. Where's the dip? Value area high, 45,120. I see that. I'd like to wait for that. That's also the opening tick of the 6 p.m. candlestick. That looks like the number to go for. If we fail 45,116, we should get into the point of control, and that's 45,000. Below 45,000, that's the no or no-go area, right? But above 45,000, dips are going to be buy zones. Just let them rotate, right? Let the dip rotate into prior resistance before you jump on the train. And then if it loses that edge, it's headed lower. My thought, based on the volume profiles, and I just got so much out of Jim Dalton being on Top Step TV yesterday. It was absolutely fantastic. If you didn't watch it, I'd highly recommend it because, wow, did he give us some nuggets. I mean, they have helped me tremendously. In the last hours of my trading day, they helped me. So, moving on. Here we go. No, go, no. No, go, go is at 45,000. That's where I would look for buying. You could take the selling pressure here, but you're against trend, you're against momentum. Just try to follow trend today. Bitcoin. We'll take a look at micro Bitcoin because this is the one I trade. I do not trade the large product. And the wave we are looking at was created by January the 21st. You can see we broke that ledge, but that's the 150 marker, so it's very far away from it. And so essentially we are inside this range. Take a look at the candlesticks, almost retracing each other. This candlestick here at 105,000 is very important. You'll notice that yesterday we broke the 105,000, couldn't quite get to 107,000, but we continue to make higher lows. So the question mark is, on this 105 area, do we move up and to the right, or do we move down into the right? Okay, and so I have no idea. I think they're retracing. I'd like to see the price action fade, at which point I would look for a long at 100,000. I think that's probably close to the go, no go, though the point of control says it's 97,100. And so the retest from above into that area, very likely to find buyers. So I like the sweet spot of 97,100. I don't know if it'll give it to us. So we can look at the range between 100,000 and 108,000 as a target range of motion. Everything's been sold up here, and so my expectation is that we're still going to see sellers there. All right? Well, whatever came out is that maybe it was GDP, but we definitely saw the volume profile tell us that that was going to happen, or that it was likely that it was going to happen. Okay, oil. Take a look. Last 5 days, literally retracing. So what does this tell us? We're going to buy the dip at 72.30 to 72.40, and we're going to sell it when it gets to 73.80 or 74. What's momentum telling us? Well, it's down but flattening. What is trend telling us? It's down but flattening. So bounces are going to be sell zones. They are. 74.30, 74, those are going to be very likely sell zones. The go, no go for long action is if it loses 72. If it loses 72, this is not a long anymore, right? The long is a counter trend trade in this environment. We just have the expectation that it will hold the ceiling here near 72 that we made around November and turn into an upward pressure event. Okay, that's what we're expecting. We have no idea. All right, if you like the short end, which I do, from a range base, then I'd wait for a retest of that 73.80 and then let my target be 72.20. And if it fails, we've got 71.50 on the horizon. Last thing, let's take a look at gold. Gold is in rollover. That's why we're looking at that 3 contract. And 28.50 was a previous prior high. There was a lot of volume in the overnight in this instrument. I mean, a lot. This is a very big area that it's inside of. But my suspicion is that we've got ourselves a little bit of a blow-off top. I don't know that it's a blow-off top. I suspect what we need to see is a retracement. So let's take a look at it. Here is the wave that I'm going to measure, right? And that's yesterday's motion. I'm calling it a wave because I'm measuring it with a Fibonacci. Calling it a wave because it has a high and a low. Okay, so here it is. if I get up over 28.55, the next stop could be 28.85. Now, I honestly believe that gold is headed to 3,000. I do. But if we're playing the gold futures, we have to really be careful about what we're seeing. And notice our big moves up have sold off. Our big moves down have bounced. Big moves up have sold off. And this is a pretty big move up. Okay, so my expectation is that we have a topping formation here in the chart. We just have to wait until it confirms. How does it confirm? Well, sadly, this is how it confirms. It bounces up and then, completely collapses. But if we lose 2,825, the likelihood of getting to 2,796 becomes higher, right? So if we lose this close, which is 2,851, and we should quickly recover it, or the price action is going to suggest a retrace into those areas. I, for one, I'm looking for topping formation, just because I suspect some level of rotation needs to be on the horizon, and that gives us that 27.50. That's $100 below, and then 27.26, which you guys know I've said that one 6 ways to Sunday. So, all right, what do we have? Hourly chart, up to flat, momentum is up. This tells us to buy. Why? Here's our point of control. We tested the moving average. Momentum shifted positive. So the bounces here are telling us we should get to the top of the band. So I'm looking for a topping formation that confirms. But if you want to buy it here, nothing wrong with that. The VWAP is sloping downward. So I'm not going to do that because I don't want to open up the risk. But if you did do that, the stop would need to be the low here at 28.40. So manage yourself accordingly. SPY. Man, I feel like I've been talking for 100 years. Okay. SPY. What are we staring down? A grind upward, filling the gap. We just did that, right? We just did that. We go to the hourly formation. 610 to 609, still the top of the range. Look at the recovery. Fills the gap, pulls right back. 605. That's going to be the number to watch today. If I can hold 605, that's the go, no-go area. Above 605, bullish. Below 605, bearish. And because we have meandering moving averages, let's wait for the dip to choose the buy. If you say, no, I want to short it, just realize everything you're doing is counter trend. Now, if you looked at this and you said, hey, I'm going to short this top, it would have been counter trend, but you would have still made money. So I'm not saying you can't do it. I'm just saying don't lollygag, right? Get in, get out. Old resistance, new support. Notice, old resistance, new support, and that's when the buyers took over again. Okay? That's what we're looking at. Let's take a look at the Qs. Qs also doing that same sort of thing. Buyers clearly stepped in at 522. That's going to be the go, no-go. There is clear resistance at 527. If we can't get above there, we likely stay in the box. Shorting from 527, going long from 521-ish. Now, the key is if you go short, try to short at the very top. Keep your stop tight, and when it gets into a target, get out, because trend is up. If trend were down, you could hang out, but trend is not down. Trend is up, so be careful there. All right, that's it for me, folks. I'll see you on the Midday Moneyball Report. I have a Friday session on Top Step TV at 2 o'clock. And hey, listen, if you haven't had a chance to see the Jim Dalton interview and the breakdown session afterwards with the traders explaining some of the nuances of what he talked about, it begins at the 1 p.m. Eastern time of yesterday's program. Holy cow, are you going to get a lot of stuff. I'm telling you, rich with information. All right, everybody, take care. See you soon.